There's no 2 years alike. A lot of people think like, oh, because this year happened, it's going to be similar to this year. I can tell you, since I got on the market 08, 09, I've never seen 2 years that are the exact same. They're so dramatically different, okay? Public account, which is now at $1.77 million, this account I started around 2018, right? Since I started that portfolio, there's been no 2 years alike. There's never been 2 years alike in a row, okay? 2018 was the year that was really marred by, in my opinion, the late year crash that happened in the market. It was a late year crash, and especially big tech stocks got absolutely pummeled toward the end of 2018. It was vicious, okay? 2019 was a completely different year. Big tech boomed in 2019. And if you look at the performance of those big tech stocks in 2019, it was freaking amazing, okay? And I remember being a great year as a Tesla shareholder as well in 2019, especially in the back half of 2019. I remember being phenomenal, right? Big tech boomed in 2019, which was very different than 2018. Then in 2020, right, especially after we had the Rona crash at first, and then after that, the riskier the better. The Fed, was going to backstop everything, and it seemed like the riskier you were in a stock, the better you were going to do overall, right? 2021 is very different. A lot of the risky stocks started to struggle in 2021. Why? Guess what? Big tech rolled in 2021. Big tech was the place to be in 2021. Those stocks performed tremendous all the way until about early to mid-November of 2021, right? 2022 was a completely different year. Tech stocks got crushed in 2022. You saw 30, 40, 50, 60, 70% falls all over the place for the tech field. Meanwhile, dividend stocks did tremendous in 2022. A lot of oil and gas stocks did tremendous in 2022. It was a phenomenal time for those stocks. They were having their cake and eating it too, right? And then here in 2023, what a different year. Tech stocks have soared this year, right? And then you go beneath tech stocks and it's like, damn, everything sucks in this market other than tech stocks. It's like, what the heck is going on, okay? Every year is so different. And so what's 2024 going to likely be, okay? Here's what's likely going to happen. 2024, I can see big tech, and all these big tech stocks, and we'll talk about what stocks are overvalued and undervalued in just a moment, but I can see a situation where big tech stocks have slight gains or slight losses for pretty much across the board. I own several big tech stocks. I own several in the Magnificent Seven. I own Tesla. I own Meta. I own Amazon. Am I expecting massive epic gains in any of those three stocks in 2024? The answer is absolutely not. I am not. I could see those stocks either having slight gains, slight losses, performing in line with the S&P 500. This was the year to be in big tech. Let me be very clear about that. It doesn't mean we can't get gains next year. It's just I think the gains are going to be extremely, extraordinarily limited compared to the gains we got this year. It's going to be like a night and day difference, okay? And there's a potential that some could go actually down in 2024. Meanwhile, I think small caps, a lot of these dividend stocks, a lot of the fintech stocks could be booming in 2024, and we could see a lot of rotation. And keep in mind, those big tech stocks are so massive that when money rotates from them, it is like a game changer for a lot of these sorts of companies because their market caps are so small. Like, somebody could sell $10 billion, I don't say $10 billion, $1 billion of some of those big tech stocks, and it won't even put much of a dent into those big tech stocks. Meanwhile, they rotate that money into some of these, and it's a game changer for those companies. It's a game changer, right? And we know because people are always having a certain amount of their checks go to index funds and those sorts of things. We know there's always going to be some level of buying pressure for the big techs out there, right? Because guess what? The Magnificent Seven, those big techs, those stocks are, let's call it the biggest weights of the S&P 500, of the NASDAQ, right? Where people are obviously funneling money. And so you pretty much have a week in and week out basis, money flooding into those stocks, month in and month out, money flooding into those stocks, right? Now, in my Become Master Stock Market course, I have so many videos in that go into valuing stocks, right? Which is a very important game. You got to know how to value stocks. It can't be just like, I like the stock, so I'm buying it. It doesn't work like that. There's a lot of stocks you could buy and aren't going to be there. You got to understand how to value companies, how to value growth companies. And so if I was to say, where are the valuations at for the Magnificent Seven? Are these stocks undervalued, overvalued, or fairly valued, right? And I was to go through my lessons and become master of stock market and judge those stocks if they're overvalued, undervalued, or fairly valued based upon their business models, historical trends, everything like that, right? I'll tell you it like this. Here's what the deal is. Tesla's trading, I would say, at fair value, but the high range of fair value. And it's only trading there because they have so much growth in future years. Okay. And that's as Tesla's my second biggest position in the public account. Apple right now is trading at fair value, but a high range of fair value. They do have a very sticky business model. Their consumers stick around. Their customers stick around. They buy the new iPhones when they need a new iPhone and when their iPad breaks and they need a new Mac, and they have the services business. But that stock's trading at the high range of fair value. Amazon, high range of fair value. And the only reason Amazon's at the high range of fair value is because, they got a super high forward P, but they have massive growth levers all over that company, and they have extraordinary bottom line growth right now. Google is a little undervalued right now, but it's the high range of undervalued. Meta is the only one other than NVIDIA that's undervalued right now. Low range of undervalued. Meta is, and NVIDIA is as well, okay? Those are only two of those 5 stocks. And by the way, NVIDIA's got to keep putting up there and saying growth rates to continue to remain undervalued. So let's be clear about that. If NVIDIA's growth was to stop, then it would actually be an overvalued stock. But since they're putting up such incredible growth, they're actually undervalued. And then I would say Microsoft's fair value, but on the high range of fair value right now. So when you look at the Magnificent Seven, these stocks are not necessarily screaming deals right now. A couple are good deals in Meta and NVIDIA still, right? But outside of that, a lot of these stocks are kind of fair value, high fair value. So this is why you should not expect extraordinary gains again from these stocks in 2024 overall. And that's why we could definitely see a high probability of money rotating from those sorts of stocks into other opportunities in the market. And so when I look out there, I say I need to be buying and taking advantage of opportunities, but these are very different opportunities I'm buying and taking advantage of over this next 3 to 6 months than what I was buying at this time last year. It was a very different game, okay? And like I said, no 2 years in the market are ever alike, okay? Never. It's not the way this game works, okay? Tesla stock and Palantir stock. It is a dedicated video. We have a lot to go through in regards to these two stocks here today. So many developments, so many things that just come out in the past couple days in regards to Palantir stock and Tesla stock. And I thought, let me do a dedicated video going over both of these stocks. Palantir's up over 200% this year. Tesla's up over 100% this year. And, you're always going to have a lot of haters in regards to these two stocks. It's just, let's be honest, okay? A stock like Palantir's performed over 200% this year. Most people in index funds hope to get that sort of return over, a 15-year span, a 20-year span. So stocks like this are going to attract a lot of negativity. They're going to attract a lot of short sellers. They're going to attract a lot of, even negative attention and things like that. They're performing tremendous. NVIDIA is another great example of that. NVIDIA stock's up 200-something% this year. And look at how many people want to trash NVIDIA and try to bring it down and try to make up whatever they want to make up in their own head and about NVIDIA's faking orders and all this stuff. And at the end of the day, it is what it is, okay? If there's that much success out there, it puts pressure on a lot of other people because people play a competition game with other people, and then they feel like if somebody's doing better, then they want to pull that stock down. It is what it is, okay? It's the stock market for you. So appreciate you guys joining me as always. Thanks so much. Alrighty, so Tesla is first off. Man, do we have some stuff to get into in regards to Tesla here today, okay? First up, Sweden's Tesla blockade is spreading. Starting Friday, dock workers in all Swedish ports will refuse to offload Teslas, cleaning crews will no longer clean showrooms, and mechanics won't fix charging points as the labor dispute rages on. So what's going on here? Well, Swedish workers are uniting against Tesla. From tomorrow, cleaners, this just came out a few hours ago here, from tomorrow, cleaners will stop cleaning Tesla showrooms, electricians will stop fixing the company's charging points, and dock workers will refuse to unload Tesla cargo at all Swedish ports. What started as a strike by Tesla mechanics is spreading in something Swedish unions describe as an existential battle between Elon Musk car maker and the conventions that, the bottom line is, folks, inflation, okay? When you have high inflation, you're going to see so much of this crap. This does not mean Tesla's a bad company or they're the worst. Look at this. Oh my gosh, the Sweden workers are straight. This is going on with every freaking company right now. All these automakers is going on with. I just saw Starbucks here in Vegas. A lot of workers are doing walkouts. Some about red cups. I don't know, okay? All I know is it's like every freaking company right now. And it's because we've had sky-high inflation for 2 years. When you have sky-high inflation, everybody starts pointing the finger at everybody and starts saying, I need more money, all my stuff's gone up so much, and so they start looking at whoever employs them. It's what goes on, okay? Now, I also saw this here today. Elon Musk backs anti-Semitic claim? Tesla shares tumble. Elon Musk on Wednesday wrote, you have said the actual truth in response to some post around Jewish communities, dialectical hatred against whites. I'm not getting into all that. All I know is Elon Musk needs to watch himself, okay? Elon Musk needs to watch himself. Because I'm telling you, okay, I grew up Catholic, and I can just tell you, the people that run Wall Street are Jewish and Catholic, okay? They're Jewish and Catholic. And so, watch yourself a little bit here, Elon Musk, okay? That's all I'm going to say. That's all I'm going to say. Very, very powerful individuals. Much more powerful than you think, Elon Musk, okay? You got to watch it. You got to watch it. That's all I'm going to say about that, okay? Now, I was trying to figure out, did this actually have a negative effect on Tesla stock today? And I believe it actually did. I was looking at the volume in regards to Tesla here today, and it looks like about 135 million shares traded hands, when about 121 million usually trade hands. So, I don't know. I don't want to get into the specifics of whatever's going on there with the Elon Musk thing, but all I know is he's got to watch himself. Because this ain't the SEC, okay? That's all I'm going to say about that. It's a whole different ballgame. Now, I also saw this here today. Court rules Tesla can block factory workers from wearing union T-shirts. So I guess there was a worry that some employees would wear pro-union T-shirts while on shifts at Tesla, right? Tesla did not violate U.S. labor law by prohibiting workers at its flagship Fremont, California assembly plant from wearing pro-union T-shirts. A federal appeals court basically ruled overall, right? And once again, this gets into this whole massive situation, right? Now, also, the UAW has said that it plans to aggressively unionize at non-union U.S. auto plants after winning new contracts at the Detroit 3 automakers. President Joe Biden said last week that he supported the union's efforts to organize workers at Tesla and Toyota, right? So they're coming. The unions are going to try to come into Tesla's situation and disrupt it. That's the bottom line with that, okay? And they're going to try a million different ways, but they're going to try to unionize Tesla. So, in the way I would kind of put this is, it's kind of like somebody coming, you get married to somebody, whether you're female or male watching this, you get married to somebody, okay? And then you got some middleman that comes in and tries to divide you and says, you know what? I don't think you guys are doing your marriage properly, so I'm going to be the middleman in this marriage to make sure everything's done properly. And you're like, what? Yeah, some people might like a middleman out there. A lot of people don't want anybody getting in their business, right? And, when you're talking about workers and a company, it's kind of a bit of a marriage, right? And just like a marriage, people can go the other way. The same thing in regards to a company. And so these unions are hungry right now. The union membership has been falling for decades now at this point in time. I'm showing you right now the rate of union membership of employees in the United States from 1983 to 2022. And keep in mind, obviously, the population in the United States has grown immensely bigger over time. There's a lot more companies out there than certainly there was in many prior decades. And yet, union membership has just been falling. And this is, at the end of the day, folks, this is a byproduct of low inflation. We hadn't had inflation be an issue since really the 1970s. And if you look back at the 1970s, 1980s, where union membership was at, it was off the charts, right? This chart only really goes back to 1983. But if you even back it up to the 70s, it was off the charts as far as how many people belonged to unions. It was crazy high. But that was a very different time. That was a time period of very high inflation. The 1970s was marred by high inflation. And as inflation became less and less of a, factor, what ended up happening was union membership went down and down and down and down over years. On top of that, a lot of companies that basically were unionized ended up moving production into, guess where? Other countries, such as Mexico. Or those companies ended up failing because their costs were too high in the business model overall, okay? So these are just some important factors to keep in mind. If Tesla can get through the next year without being unionized, I think they'll be good from that point on. I don't think they'll be unionized anytime soon if they can just get through this next 12 months. Because as inflation becomes less of a worry for workers, I'm telling you, union interest is going to become less and less important, okay? Now, on today's Twitch live stream, which shout out to everybody that joins me over on those Twitch live streams during the market trading action that I do there, we were looking at a bunch of Google Trends data. And so we looked at a bunch of different companies, and I found something very interesting in regards to the Model 3 and the Model Y. Very bullish. Some good news here, okay? Good news. So Google Trends data for Tesla Model 3 is really strong the past several months now at this point in time. So this kind of shows you 2021, 2020, 2022, right? And this is really like 2023 here. Now, the numbers are really strong. Now, it doesn't always equate to sales directly right away, right? But I can tell you, if there's that many people searching Tesla Model 3, it likely means that a lot of people are in at least the research phase of their next vehicle, right? So this is very positive, and it could be a delayed buy situation where people are waiting for interest rates to maybe drop some or something like that. But I can tell you, with the fact that Model 3's up here right now for Google Trends is freaking phenomenal, because I can just tell you, Google Trends for Model 3 hasn't been that good for a while, until really the past 6 to 9 months at this point in time. So I would say that is a very positive signal, and that should help Model 3, honestly, in future years. Now, what about Model Y? Well, check this out. Model Y also trending much higher on Google Trends as well, right? It's been beast the last several months from Model Y. Look at where Model Y was previously on Google Trends data, and look where it is now. This is kind of anything below 25, I would say, is kind of lower amount of people searching it and kind of in trending and whatnot. And look at how many people were here recently. So once again, this means a lot of people are interested in searching, finding out more info on the Model Y. Okay, so all this, whether these searches and people looking at these and finding out more info, whether it translates to sales this year or next year or the year after, is that's up for debate. But the bottom line is, with that many people searching and finding out info, I'm going to say this is probably going to add up to sales overall over this next couple years here. Okay, so I definitely like that. I thought that was really good news, and we need some good news on that front. But I can tell you, this is good news here, right? More good news. A couple of weeks ago, Elon Musk did a show with Joe Rogan. Obviously, that's going to get crazy views all around social media, whether it be YouTube, Instagram, TikTok, everywhere, right? X. So those clips got tons of views out there. One of them was talking about the Cybertruck, and they actually shot an arrow at it, which was really interesting. And then Joe Rogan had The Rock on this week as well. And during The Rock's interview, they actually asked The Rock, Rock asks what Joe Rogan's favorite vehicle is, and then Joe Rogan goes on like a several minute on how Tesla's so amazing and this and that and the Cybertruck, and then The Rock supposedly has never heard of the Cybertruck, which I'm like, has The Rock been under a rock? How I literally don't understand how any human would have not heard of the Cybertruck yet. That's mind blowing to me. Either he's lying about that, or maybe the man's just so busy he doesn't have time to even have heard of the Cybertruck. But anyways, I thought that was big, because The Rock on Joe Rogan, that's going to get huge views. And once again, those clips are going to be played for months to go in the future, and so it's nice to have some positive momentum there, right? Now, you want more positive momentum? I got more positive momentum for you. Look at this, okay? Interest rates for auto loans obviously shot to the moon over the past 18 months. We all know that, right? The good news is, very high probability, auto loan rates are going to actually start going down now over this next 6 to 12 months. Very high probability. I'd put it at about a 70% probability that auto loan rates are coming down over this next 6 to 12 months. I would put it at probably a 20% probability it's flat, and only a 10% probability that auto loan rates are going higher than where they're at right now, okay? When I look at what the Fed's likely going to be up to, the Fed's next move's likely down, whenever that comes. If I look at what's going on in the Treasury market, everything spells auto loan rates are going to go down, okay? And so that's good. That's good overall if you want to be bullish on Tesla. Now, I also noticed, just typing in Tesla, man, they are really pushing hard the federal tax credits, right? $7,500 federal tax credit. And I got to say, if you're in the market for a Model 3 or Model Y, I don't understand why somebody wouldn't buy it, this year. I don't think you're ever going to be able to get these vehicles cheaper than what you're able to get them right now. Between the tax credits and between the price cuts Tesla did, I don't see that. I don't see a way Tesla's going to go down on price anymore. I actually see them potentially going up on price at some point in 2024, especially if auto loan rates are dropping in 2024. I see definitely a decently probability that they could go up on Model 3 and Model Y price in ultimately 2024. So I don't know, man. We'll see how it all shakes out. But, you definitely have some bad news and good news in regards to Tesla. And I thought I would cover that there, okay? Alrighty, guys. So right off the top here, okay? If we go back to very late 2020, obviously 2021, we had a booming stock market that obviously got a ton of retail investors interested in the market, right? We had a lot of people staying at home. We had stimulus pumping out there like crazy. I mean, the amount of forms of stimulus at that time were off the charts. We've never seen it like that before, right? You couldn't really get yields anywhere else if you put your money in a savings account, CD accounts. So a lot of people got attracted to the stock market or got attracted to crypto, things like that, right? We also had reopening excitement. We also had revenues that were flying higher for companies. Those revenues were flying higher, one, because they came off of really low comps in 2020 because of Rona, right? On top of that, we had revenues flying because there was so much stimulus pumped into the economy. At a lot of companies, revenues were skyrocketing during 2021, right? And you had this perfect storm of investor excitement, and ultimately the S&P 500 reached all-time highs. The Nasdaq reached all-time highs. The Dow Jones Industrial Average reached all-time highs. The Russell reached all-time highs. Obviously, massive amount of stocks across the board reached all-time highs, and we still haven't actually reached new all-time highs over 2 years later now at this point in time. And then what happened from there? Well, look at this, okay? At first, people were thinking, oh, maybe it's just to buy the dip. But no, the dip just kept dipping and dipping and dipping. Stocks like Meta, Nvidia, AMD, Shopify, Netflix, Salesforce, Tesla, Palantir, Bitcoin, everything fell 50% plus. Major, massive crash. Epic crash. When you talk about some of the most famous assets in the entire world, all falling 50+%, that's an epic crash. We had an epic crash that basically transpired from the end of 2021 through about the end of 2022. It was vicious, right? And this led a lot of retail investors to leave the market. And you can see that with, companies like Robinhood and their numbers and just all the data in general, right? A lot of people got convinced investing is a scam, right? Stocks are only going to go lower. Then you had a lot of people starting to flip at the very end of last year. A lot of retail investors specifically start to flip to bearish and start to place put option bets on stocks like Tesla, Nvidia, AMD, many others, because these stocks just kept going down and down and down. So people started thinking, oh man, they're only going to go worse from here. Recession 2023, market's going to go a lot lower. Tesla's going to $50, $60, right? Nvidia's going to $50, $60. And obviously the complete inverse happened, right? Basically people started having a view, you can't make money in the market, because that's the way imagine you get in the market for the first time in 2021, you're buying everything like this, right? And then you lose 50% plus your value. Everybody starts viewing like you can't make money, and the only people that makes money are the people that bet on the downside, right? So you had just a massive amount of people leave the market in 2022, or ultimately, if they didn't leave the market, a lot of them went short the market. They're like, oh, I'm going to make my money back by shorting all these stocks because we're going to have the big recession in 2023. It's all going to go bad, right? And here's a 1 year chart of what the reality was of all those stocks that people sold out of en masse, right? Nvidia went up nearly 200%. This is just in the past 1 year. Meta's up 188% in the past year. Palantir's up 143%. Bitcoin's up 120%. Shopify's up 62%. AMD's up 58%. Netflix is up 48%. Salesforce up 35%. And Tesla stock is up 17% just in the past 1 year. 1 year. Not from their lows. All those actually hit lows at different points in 2022. This is just a 1 year chart of these, right? And so retail absolutely screwed themselves twice in a very short amount of time, right? And so that leads us to today and what's going on, right? Which is a very interesting dynamic. So here we are at the moment where the only thing that looks like the Holy Grail is the Magnificent Seven, right? The biggest of the big tech companies, that's the only place you can be, right? And the reason being is these stocks have all performed tremendously in 2023, and this has led to kind of a little bit of a brainwashing in the stock market that if you want to make money in this market, you better put your money in Apple, Amazon, Google, Meta, Nvidia, Microsoft, Tesla stocks like this, right? Because look at how well they performed this year, right? And then the layer beneath that as well, right? The AMDs and those other stocks, right? Salesforce, that's the only place you got to be, right? And it's interesting because I, obviously on the reaction channel, I react to so many different videos, right? Bullish videos, bearish videos, everything across the board, right? And what do we hear a lot of Wall Streeters saying right now, right? They're saying don't even buy small cap stocks. Don't even buy those, okay? They're going to have another horrible year in 2024. Don't stay away from those. Those aren't a buy. Dividend stocks, don't buy those, okay? If you're going to put any money anywhere, they're saying put it into these sorts of stocks. Okay, does that make any dang sense? Well, let's think about this logically for just a moment, okay? The Russell 2000 is down over the last 3 years. Literally, the Russell 2000 today is lower than it was over 3 years ago, okay? In the past 5 years, the Russell's up about 11%. Small cap stocks, right? Now, I went back and I said, in my entire lifetime, because I was really curious about this, in my entire lifetime, I'm not talking about my investing lifetime, which my investing lifetime is 15 years. I'm talking about my entire life, way before I got started in the market, right? But I was still on this earth since 1989. And I said, how many times in the past, how many time periods in the past could I buy the Russell 2000 for lower in my entire life than it was 3 years prior, okay? And oh my gosh, did I find something absolutely magnificent when I looked back at the data, okay? Here's the deal. One time period I could find where I could buy the Russell lower 3 years out was a situation in the Great Financial Crisis. So if I go back to May of 2007 versus May of 2010, I can find a time period there when I could literally buy the Russell lower than it was 3 years prior, okay? So boom, we got one example right there in my life. Now that's the only time period in my investing lifetime that this has ever transpired. Think about that for a moment. I've been in the market 15 years, and this was the only time period. And by the way, I wasn't even in the market in 07. I started in 08, so technically we might say that doesn't even count, okay? Think about that for a moment. When's the next time period? The tech bubble crash. The tech bubble crash, when, all these internet stocks that, the internet was so hyped, everybody's putting money in all these internet-related anything, and, it might get clicks and this and that, and these companies didn't even have revenues and certainly didn't have profitability or anything like that, right? In that whole situation, yes, I could have bought the Russell 2000 cheaper 3 years out than I had previously in a 3 year period, right? The next time period, I look back and I found almost a time period. This is almost a time period, okay? In 1989 through 1992, I almost got a time period where, in a 3 year span, you could buy the Russell cheaper, okay? But it actually didn't technically fit. It was close. It was really close, but it wasn't quite there, okay? So let me get this right. There's been 3 time periods in my lifetime where the Russell was down on a 3+ year basis. And one of those time periods is right now. So let me think about this for a moment. Is it or is it not a good time to be a buyer of smaller cap stocks? Well, thinking about this logically, I would say it's probably one of the best time periods ever to be a buyer of small cap stocks. Now, do these stocks stay low for the next 3, 6, 9, 12 months? Maybe, right? Maybe. But at the end of the day, if I can only find 3 time periods in my lifetime, and one of those time periods is right now where I'm getting this sort of deal on an index, like that's pretty darn attractive, right? And so I think about this for 2024, and I think about what could the market do in 2024 that could screw everybody. And I thought about this one, okay? Imagine a scenario for just a moment where big tech stocks, right, the ones that everybody's saying, okay, if you're going to put any money anywhere in the market, you better put it into the Apples and the Microsofts and all those sorts of stocks, right? And imagine a scenario where, let's say, the big tech stocks are kind of flattish, or that maybe they get slight gains in 2024, while the Russell Wilson goes rolling. And I mean, it goes absolutely flying. And I'm like, I could see that as a potential, right? I see several different scenarios being a potential in 2024, but I don't think this is a scenario anybody's really planning on. And many times in the market, it's the scenarios that no one's planning on that are actually end up transpiring. A lot of people are planning for, the stock market's going to crash next year. It's going to be a big recession. Okay, a lot of people are planning on that, and they talk about that. They've been talking about that for over a year, and that's all they talk about all the time, okay? Then we got the second group of people that is like, yeah, it could be a good year for the market, but it's really going to be driven by the biggest stocks in the market again next year. And I just think, okay, that's really the 2 scenarios that people planning for any other scenarios, because you kind of got to play for some other scenarios as well. It's not like there's only 2 ways out of this market. There's several different ways out, right? No, they're also saying, don't buy these sorts of stocks, right? The stocks like the Revolves, the Nordstroms, the Foot Lockers. They're clearly not only saying that, but they're saying that in the price action. They're basically saying these stocks are going to be horrible in 2024. And I asked myself, are they really going to be horrible in 2024, or are these stocks going to go up 50 to 150% in 2024? Here's what I look at, okay? the consumer got absolutely wrecked by inflation for 2 years straight, right? Basically, it started in the first half of 2021. Now, people weren't talking about it in the first half of 2021, unless you know people that own businesses. But I can tell you, inflation started to hit people in the first half of 2021. It's just the media and the government didn't really start talking about it until the second half of 2021. But it had already started hitting in the first half of 2021, right? And it hit consumers hard all the way till the first half of 2023, right? And now it started to alleviate, right? And when I think about the consumer getting hit hard by inflation, you're talking about 4% plus CPI type numbers, right? Now, we're in a position now at this point in time where the salaries and wages are actually playing a game of catch up. Those have lagged a bit, okay? Those have definitely lagged the market, but they're playing catch up now, okay? And so this could actually put the consumer into a much better, stronger position overall in 2024 versus where they were at in 2022, and certainly where the consumer was at this year in 2023, right? And so I think about also, these stocks are going to have cake comps, right? And the consumer got hit so hard from inflation, so they stopped spending on Revolve and Nordstrom and Foot Locker and all these clothing-related companies this year, right? And I think about the comps are going to be cake for these companies. So I think about a consumer that's probably going to emerge a lot stronger in 2024. It's definitely a possibility, right? Because inflation numbers just aren't going to be there in 2024, but wages and salary growth is still going to be there because the employment market is still strong. We're still under 4% unemployment rate, which means businesses still got to pay out. These big companies still got to give their raises. Apple, Meta, all these companies, right? And then I think about these cake comps that all these companies are going to have. And what happened this year, right? Think about what happened this year for a moment. Well, guess what? The Metas, the Apples, all those companies had pretty cake comps. I don't want to say Apple. They're probably the one company that didn't have cake comps, them and Tesla. Outside of that, all those other big tech companies all had cake comps to comp against this year, right? Which made their growth rates look really extraordinary. Meta just reported 23% revenue growth over year, which is an extremely strong number. But remember, in this same quarter last year that they just reported, they had a very weak number, right? So now these companies like the Revolves, the Nordstroms, the Foot Lockers, all these companies are going to have numbers to comp against in 2024 of these 2023 numbers, which are cake. These are super disappointing numbers all these companies have put up this year, right? With a consumer that is likely going to be in the strongest place they've been probably since 2021. Now put this together, and ultimately that usually means very good for retail sales. And also, keep in mind in 2024, you're still not likely going to have big ticket purchases doing very well. People still aren't going to be out there going to buy new homes, new autos, new boats, new RVs, new whatever, in terms of anything that's on a loan, because interest rates are still going to be high. So if they want to go out there and spend, it's going to be on smaller ticket purchases. Restaurants, retail, all those sorts of things, right? Those sorts of categories where somebody's going out there and spending $40, $80, $100, $200, $300. They're not going out there and spending $300,000. There's a difference, okay?